Have you ever fallen for the FOMO trap? Fear of missing out, where the market looks like it's just going to continue going up, and as soon as you buy, it starts to go down, and you just can't figure out why. Well, today I'm going to show you how you can identify the FOMO trap. It's also called an end of a wave 5 before a major correction occurs. I'm going to show you how you can do it in a mechanical way, non-emotional, and with consistency. If you don't know who I am, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So today we're going to focus on an end of a wave 5, how to maximize your profits. And if you're brand new to the channel, make sure you subscribe. Make sure you hit the bell notification because we bring daily content to help you increase your financial health in this beautiful space called cryptocurrency and blockchain. So let's get started. So we are on part 9 of this 9-part series. Yes, we've worked really hard. First, we figured out the momentum on a weekly and daily. We're both pointing up. We identified in advance this wave 2 high probability zone using Fibonacci price on multiple degrees, but also Elliott wave on multiple counts of degrees. A wave 5, of a wave C, of a wave 2, with retracements, with extensions. Basically, this cluster zone, which is a higher probability zone, which is a retest of the wave 1, and it often acts as a launch pad. A launch pad for, if I can draw it over here, this wave 3. And then we had this beautiful wave 3. And we identified this live, advanced in 2021, June, July. And we're just using this as the example. And it went up, just exploded to the upside in typical ratios. And then we identified in advance where this is likely to end before this ABC wave 4 correction. And today what we're going to focus on is really identifying now in advance what is the high probability end of wave 5. Yes, and what typically happens and why. Yeah, that's what typically happens after a 5-wave sequence. And we identified this, again, I'm going to loop it. We were 2 steps ahead of the market, which allowed us to make very objective, mechanical, high probability decisions. Right, so what we're going to do now is we're going to take a macro viewpoint and go, okay, what is the typical buying and selling behavior of an end of wave 5? And we covered it earlier on, but now we're going to get very, very specific for selling. Especially if you're bought down here and you're still holding up here, or if you just bought a new position and you want to ride this wave 5. It's also a good strategy. So what we're going to do is we're going to measure wave 1 to wave 3 in terms of the price movement to the upside. That's going to be 2 clicks. First click down here using it's called on TradingView, this software, it's called trend-based fib extension. Second click on wave 4. I'm going to do a projection at what's this potential wave 4. It looks like it's going to hold because you saw in the last part, we got Fibonacci retracement, alternate price projection, pattern, all coincided with momentum as well. So we've got 4 things telling us this is likely to be an end of wave 4. So now what we're going to do, let's do this. We're going to keep it really, really simple, really, really clean. So we're going to click on this tool. We're going to click the beginning of this wave over here. I'm going to do it to the right-hand side, though. It makes it easy for us to see. So I'm going to do it like this. So I'm just going to make sure I get the right points. So you can really, really see these waves very, very clear. Beginning of wave 1, end of wave 3, projected from wave 4. Back. The key ratios, there's 3, 38, 62, and 100%. Now, is that good enough for our projections? Well, it gives us a great start. It tells us these are the key ratios for an end of wave 5. But which one of these 3 is most likely? Well, wave 5 and wave 4 have a relationship. And wave 5 and wave 1 have a relationship. And we're going to use those relationships. So the first one we're going to use is something called an external retracement. We're going to measure wave 4. I'm going to use candlesticks for this one because we're going to use the extreme ranges because we're going into an intermediate wave count. It gives us a bit more accuracy. And the two ratios that we want for an end of wave 5 is 1.272 and 1.618. And you can see it gives us these 2 points up here. So it means we can eliminate this one, right? So we can eliminate to get rid of this. Fabulous. All right. So now we've got a very high probability zone over here. If I can draw this out. For an end of wave 5. But again, remember, we're doing this in advance. We're not reacting to the market. We are anticipating the market. That's what the winners do. We anticipate. We don't react. And what we want to do over here is say we're looking for a potential wave 5 high. And we're going to ride this out. Put a question mark over here. Because what we want to know, similar to this wave 2 movement, remember at the beginning we said 1, 2, 3, 4, 5. And then we have the wave 2 correction. But now what we're looking at is a 1 macro, 2 macro, 3 macro, 4 macro, 5 macro, and then over wave 1, and then a big correction. And we're anticipating this in advance. So now let's just do one last thing to even get tighter with these ratios. Is we are now going to measure wave 1 and project it from wave 4 to see what are the typical ratios. And the most common is 100% to 1.618. That means wave 5 is often 100% to 1.618 of wave 1. So we're just going to measure those. By the way, if you're liking this content and this 9-part series, show your support. Give me a like because it makes a huge difference to our channel. YouTube loves it when you like my content, which means I can bring you more value in a timely fashion because our mission and vision is to help you increase your financial health through simple crypto and blockchain education. So now let's measure this. So we're going to go for trend-based fib extensions. Measure this and project it from this low over here. Now you can see this red line, it doesn't exceed the wave 3 low. So it's probably not going to be that one. It's probably going to be the 1.618, which is up here. Right, so now this is really valuable information. Very valuable. We've got this zone here, and if it supersedes that zone, the next zone is actually up here. So we've got 2 clear price zones. Which one is it going to be? Right now, we don't know. But we can look at pattern as it unfolds, and we can look at momentum as it unfolds. So we're going to do 2 more things as a bonus today. One, we're going to unfold this so we can see what would we have done in real time, in real life, as this unfolds. So let's have a look. Let me just actually move this to the side as well. I'm just going to move this to the side just so it's clean and clear for us over here. All right, I know there's a lot going on, but I'm going to zoom in like this, and I'm going to zoom in like this. Oh, not like that, like this. All right, we're going to do it like this, right? All right, let's see how this unfolds. All right, let's just unfold the data. So the market hasn't taken off yet. Boom, boom. Okay, now it's taken off, right? It's taken off. We've got this surge to the upside, but we haven't exceeded this. So there's no action needed. You know, we can relax. Unless you want to move your stop loss, we can move it to this swing low, right? But we can relax, right? It hasn't reached anywhere near this minimum zone yet. All right, and now we've got this movement. Boom, it's come back down. It's gone back up. All right, now we've exceeded the high. All right, now we know that this wave 4 is confirmed because this high has now been exceeded. That confirms this wave 4. So we get rid of the question mark, so we're really clear on our thinking. And now we just allow it. Now, for instance, we've got this first bearish reversal. We can ignore that. We've got this second bearish reversal. Now, yeah, we don't need to even concern ourselves yet. But if you're moving your stop losses, right now you're focused on this low over here, right? And now let's just see how it unfolds. Okay, so now we can review this of looking at this. Is there any 5-wave type structure when we're looking at this part of the market? Well, this range over here, if you've watched my masterclass on Fibonacci and Elliott Wave, you know the rules of Elliott Wave is wave 4 cannot trade into the range of wave 1. So this can't be a 1, 2, 3, 4, 5. That can't be the case. It more looks like more like a 1, 2, 3, 4, 5 to the upside. So I would actually draw that out of some sort of structure that's unfolding. It looks more like, I would say, again, there's a couple of wave counts, but the most obvious one is probably this being this being a wave 1, this being a wave 2, a wave 3, a wave 4, and then a potential wave 5 unfolding. Now, what that tells us, this is important, really, really important, because now we're looking to really get ready to exit. Now your stop loss should be no lower than this point here, end of a wave 4, because this high has been taken out. So from a stop loss perspective, if you're selling or looking to sell, it's here. There's a couple of really, really important pieces of information that you need to know. Really, really need to know. Let me grab this wave 5 and we go, okay. One is the next bearish reversal on the momentum. It's probably going to coincide with the wave 5 of a wave 5. Right? So we don't even need to double guess right now, but it looks like we're coming towards the end of a major, major, major trend. Right? And when I say major, major, major trend, we're talking about this huge movement from $25 all the way up to $230, $250. The candles, let's have a candle, how wide these are, right? So it's looking quite healthy. But now let's do an end of wave 5 projection. You go, I remember you saying that before, Jiggy, but how do we do that again? Right, we're going to measure wave 1 to 3, project it from 4 to see if we got more information. Wave 1 to 3 projected from 4. By the way, I covered this in more detail in the Fibonacci and Elliott Wave Masterclass. 62%, 100%, and 38.2. Right, 38.2 is down here, and we want to be aware of those. So it just gives us a more confluence of events. But really what I'm now looking at is the next bearish momentum reversal. Look at that, the price just shoots up. Really smashing through these. So we can get rid of this. We can get rid of this. This just tells us now we're in this very high probability zone over here. And again, we want to be moving. Like if you've got a stop loss or you're looking to maximize your position, what I would be looking to do is literally now trading. If you have a stop loss, your selling position close to the market, really close to the market. And then what we'll see happens, like it moves up again, you move closer to the market. One bar low, keep getting closer to the market, and then you would have been stopped out. And we've got a bearish reversal on the momentum. Let's just get rid of these two. Hopefully it's making sense. We've got this bearish reversal and a divergence, meaning the momentum's looking like it's going down and the price is still going up. So now it looks like we may have, I'm just going to get rid of all the lines now. I'm going to get rid of all the drawings. Let's just get rid of, or let me do it like this, just so we keep the ones that we need. Let's get rid of this. Let's get rid of this. Let's just get rid of this. We've been stopped out in this example. And it looks like we got a beautiful wave 5 of a wave 5. The trend is your friend. Ride it until its end. Until it reaches its bend. Okay, my friends. Now, we identified this trend reversal of a wave 2. We rode it until its end. What looks like a very high probability based on momentum, pattern, and price. Now what we should anticipate is get out, sell. It's had its time. And people would argue, but Jiggy is looking so optimistic. I should buy more. I should double down. This, that, and the other. I go, yes. But remember, most markets, 95, 99% of the time are driven by fear and greed. So what typically happens after a 5-way sequence? What do we anticipate? Let's not get rid of all of this. Let's get rid of all these lines. And this is going to be a game changer for you. This is part 9 of this 9-part series. Make sure you watch the other 8. It's really, really valuable information. It's next level. It just gives you just such great information. So if this is the top of the trend, because a lot of people think you can't buy the lows and sell the tops. But with this information, with the confluence of events, you can. You can, with high probability, never certainties. So what we anticipate after a 5-wave sequence is a correction. And I want you to remember, there's always a wave count above and a wave count below, right? So I'm actually going to delete these 1, 2, 3, 4, 5 for a reason. I'll show you in a second, if I can get a hold of it. It's going to make it really, really clear for you. I want to just draw it out again. A macro wave 1, 2, 3, 4, 5, and we're going to draw it as a, it's called a, we'll do it like this. Once you got a 5-wave sequence, once you have a 5-wave sequence, right? It's not confirmed yet, but it looks pretty healthy, looks pretty good, looks pretty strong, looks pretty clean. There's a wave count above and below. So after a 5-wave sequence, if it's all-time high, it means there's a 5-wave structure of a wave 1 on a macro. Go, what does that mean? Well, we're going to draw it here. It's a wave 1 of a macro. Well, what comes after a wave 1? It's a wave 2, my friends, a wave 2. You go, well, what does that look like? Well, now we're going to actually change it to an intermediate wave count, because now the macro is actually the wave 1. Well, wave 2 typically retraces back, and we're going to rinse and repeat the exact same that we did for this whole movement. This whole 9-part series, we just repeat the whole thing. The weekly momentum, the daily momentum, the pattern on multiple degrees, the Fibonacci ratios. But now let's just map it out and let's just get to the point. All right, we're going to do a retracement. What should we anticipate if that wave 5 top holds? Well, actually, let's unfold the data a bit more. We want to see if there's a movement that confirms that's going to be at least bigger than this price and this price to the downside that confirms our bias. Okay, bang. That's enough information right here. That tells me this looks like a trend reversal happening. Right, look at this. Boom. All right. Well, first of all, this is bigger than any movement here and even bigger than this, right? Because we can see it. We can see this is bigger than this and even bigger than the wave 2 on a price perspective. That's what you call an overbalance of price of a trend reversal. So we rolled the trend until the end, until it reaches its bend. And now, unless you know how to short the market, you just stand aside and wait and be patient. Or, yeah, stand aside and wait and be patient. So now, let's get rid of this. Let's just do some wave 2. We can give this as a bonus. What should we anticipate as a wave 2? There's 2 main things. Let's just go retracement. We're going to do the exact same as we did to begin with. But now we're doing it on the macro of this whole movement. It just rinses and repeats. Yeah, believe it or not. The markets are always expanding and contracting. Expanding and contracting. And it's like cycles within cycles. So now what we're going to do is 50, 62, and 78.6. Just as we did before. I'm going to give you a little teaser. There's something called Fibonacci time. And I'm looking to do a separate course on this. But most corrections occur within a certain amount of time. And normally the minimum is 38.2%. So we should expect Solana to keep on correcting beyond February 19th. Now, if you're watching this video, it's past February 19th. So let's just see how Solana unfolds. Look at that. Look at that. Look at that. Boom. We're in the time zone now. We've taken it up to today's date. And now it looks like Solana is in a position to potentially have done an A, B, and a wave C. On a macro, wave 2. And we literally rinse and repeat the whole thing. If we jump into a weekly chart in the top left-hand corner, and I go into today's data, right, which is this. I'm just going to get rid of these lines over here. Look at the momentum. The momentum is in the oversold zone. I'm going to use 2. There's 2 momentums I want to use. One is bearish and one is bullish. So we want to ideally have it bullish. We want to have it pointing up. And the one we want pointing up is this particular one. And we can see he's recently done a bearish reversal. So we want to wait for the next. Well, there's a couple of things we want to see here. It's in the oversold zone, which means the downside should be limited. If pattern overrides momentum. If the pattern's looking good and it coincides with Fibonacci price on the daily chart, then we can consider a potential long position. This chart here, if it breaks down to a 5-wave sequence, and this looks like a wave C, and this looks like a wave A, it has potential to be now a wave A, B, C of a wave 2. And if it is, then what do we anticipate? Well, we want to watch this very, very closely because we anticipate the same thing to happen again, but to expand into a new 5-wave sequence. And what would that normally look like? It would normally look like a 1, 2, 3, 4, 5 of a wave 3. What's the typical ratios? It's the exact same, 1.618. Let me do it to the side actually. 1.618 to 2.618. And you can see that we're using the exact same methodology as we did before. Will it hit these numbers? We don't know. We can only do probabilities and never certainties. So there you have it. We've done 9 parts. Today was part 9 of 9, where we did momentum in detail, pattern in detail, price in detail for end of wave 2, but then of a full 5-wave sequence, and then a full, bigger degree ABC correction of a potential wave 2. And now will it unfold? Will the market optimism come back in after this big correction? We're talking about a 62 to 78.6% correction, where Solana went from as high as $260 way back down to $80 again. And will it hit $500 to $750? Markets go in cycles and trends, and hopefully you found this really, really valuable. If you have, support the channel, give us a like. If you want to learn how to do Fibonacci and Elliott waves in full detail, first of all, take my free Elliott wave Fibonacci masterclass, and then you have the opportunity to buy one of my courses, which covers everything in step-by-step detail. 3 to 5 minute lessons on momentum, Elliott wave, Fibonacci price, where you can apply this in your own time to your own portfolio to stack the odds in your favor. You'll also get an invite to my private Telegram group. We do weekend workshops where you have more access to me. We can ask your questions and we can do live analysis on what you are looking at. Let's finish this 9-part series with a quote from my book. In fact, you know what? Let's not go with the book. Let's go with top of my head. All right, let's go with, I'm going to go with Churchill. Right, Churchill, I believe it was Churchill that said this. If you want to experience the ocean, you must first build the courage to leave shore. When it comes to crypto and blockchain and any market, especially when there's volatility, it can be scary because there's always risk involved. And we can only do probabilities and never certainties. But what we're aiming to do is increase your financial health by stacking the odds in your favor, by learning these key skills that are identifiable in advance. And when they are, you can take the appropriate action in a non-emotional way, in a mechanical fashion with objectivity. And when you can do that time and time again, you become the casino, and the probability of you winning this crypto tennis game just goes through the roof. And there's multiple strategies, but you must build the courage to leave shore, take action. And amongst your wins will be losses. But overall, on the long term, and think long term. In fact, one more quote for you, one of my favorites. Most people overestimate what they can do short term versus what they can do long term. They overestimate short term and underestimate the long term. We're on a $1 trillion trend, which is going to be bigger than the internet itself over the next 2 decades. And there's going to be multiple bull cycles, bear cycles, bull cycles, bear cycles. Your job is to upskill yourself so you can leverage this beautiful space, this beautiful technology that's decreasing the cost of trust by up to 10,000 times. But a lot of the price movements is pure speculation. And your job is to be able to read that psychology and act with 2 steps ahead of the market. All right, like, subscribe, hit the bell notification, take the free Elliott Wave Fibonacci Masterclass, and hopefully I'll see you in one of my live workshops where you will bring in your analysis to me, showing me what level you're at, and I will help you get to the next level. All right, I will see you soon.